Today is Wednesday, January 10th, a very important date that could make history for the crypto ecosystem. We're facing the deadline for Gary Gensler and the SEC to approve or reject the creation of a Bitcoin spot ETF. Regarding this event, we'll study how we need to approach the financial markets, specifically Bitcoin and Ethereum. As we've seen in recent days, all these ETF-related news have caused significant volatility, leaving investors uncertain and almost at a loss for what to do. At Crypto Insight, we conduct advanced technical analysis tracking large institutions, those significant investment funds capable of manipulating and influencing financial asset prices at their will. Under this working principle, we chart a long-term map. Many of you may recall that we were expecting an aggressive bearish climactic action, situating a creek and assessing a bullish accumulation process. Over time, we've been closely monitoring this and now give considerable importance to this initial breaking trend line. Zooming in, we observe this bullish impulse accompanied by a channel and for several weeks before the idea of the approval or rejection of a Bitcoin spot ETF became popular. We've discussed the notion of a bullish climactic action. So let's now discuss how we can work on the catalyst that large institutions will use concerning the approval or rejection of the Bitcoin spot ETF. But before that, it's essential to be clear that it's not that we're adapting to circumstances, but rather a well-done technical analysis beforehand was leading us to this circumstance. This isn't new or surprising. We were already expecting it. When all the pieces of the puzzle fit together, that's when light and clarity emerge. Now, if we briefly step down to the hourly time frame, notice how in our relentless pursuit of that aggressive bullish climactic action, we had already been analyzing this trend line. Here, we were also working on a defensive zone, and simultaneously, from a slightly more micro perspective, we had identified a trap zone. Using order flow, we found that smart money was positioning itself long, not only in Bitcoin, but also in Ethereum. After seeing this structural break on the creek, knowing that we've been discussing the imperative need for a bullish climactic action for weeks, and then with advanced tools and highly developed technical analysis, we identified that the trend confirms when the price was at this point. At that moment, it was clear to us that this bullish trend would only continue, specifically up to this zone right here. If we had a relevant level here, where attempts to sell had clearly failed, it seems an important level to monitor. Then, at that level, as you'll see now, a trap scenario unfolds. Initially, there's a drying up in the tape, low transactional interest as seen in the delta and in the clearly bearish red cluster. It doesn't prosper, and in the consecutive candle, it reveals 61,000 lots, a total of 366 trades going long in a trap scenario, capable of recovering, buying back, and pushing the price upwards. Hence, we were seeing a short-term bullish priority for Bitcoin and Ethereum, a priority that, as you can see in the recording, the price has already moved upward, a part of the job. So, in Bitcoin, there has been a significant breakthrough. Note how close they would be to seeking a deceptive breakout, a final deceptive climactic action to see if it comes with the ETF news and then reverses. In other words, with Bitcoin, we're bullish, still are. We're before this, but now that we've had the breakout, as we're recording, let's consider that we're in search of an AZ pattern. We'll see if we get a correction first or not, but the idea is to seek strength and upward expansion. The bullish climactic action. Look, one thing is crystal clear, the bullish climactic action, out of sheer necessity, had to surpass $45,880. It was evident, and here we got that breakthrough. Not just that, within a trap scenario, they planned a trap within a trap. You see, here's a trap, all on its own, which we were seeking. But within this trap scenario, we have a new final trap. Okay, what catches our attention? Clearly, it's striking that the price has already undergone a distribution process above a highly relevant structural area, which we expected to revisit. Now, you should know that the movement catalyst for seeking the long position was a tweet from the official SEC account, announcing the approval of the Bitcoin ETF. But, as mentioned in a previous video before the event based on the smart money analysis, the continuity of the bullish movement made a lot of sense. Therefore, news merely catalyze movement. They don't dictate the market. Smart money had been preparing for the movement in advance. And then, interestingly, a news item appears that favors their positioning. However, this is a temporary positioning, of course. Observing this trap and its re-entry with confirmation within the structure leads us to think that we are in a trap scenario. To answer your question if this means means we're ready to fall. I'll share that information with you shortly, but first, welcome to Crypto Insight, your ethical and moral channel for cryptocurrency technical analysis. Here, we really know what we're talking about. We conduct advanced technical analysis that has been developed for over 12 years. We upload videos several times a week. If you're enjoying what you're seeing, let me know and leave a comment with your opinion. Like the video, subscribe to the channel, and click on the bell so you don't miss the next opportunity. Now, it's crucial for us to compare and perform a cross-analysis of the Bitcoin event with Ethereum. Well, take a look. Here you're looking at the Ethereum chart, and what we've been analyzing is quite evident. We could clearly see that the smart money had taken a long position at this point, and it was plausible to expect a correction before breaking through this trend line. In simpler terms, it means that major institutions have been actively buying into this market trap after absorbing these bearish movements, thus driving the price upward. So, what we're seeing is that major institutions in Ethereum seem to be going long, so studying a potential future breakout of this structure could be positive, at least to look for a correction of this bearish momentum. Therefore, we'll see if we'll break the crick to look for an upward movement. Okay, but now notice the following. Moving to the 8-hour time frame, we're noticing that in the case of Ethereum, it's religiously respecting the origin level of the breakout. In case you don't know where it comes from, this structure originates from a very relevant level whose rupture led to the crypto bearish market. So, if we project the rupture of the breakout origin, a projection we've been working on for months, we were already seeing that after this impulse, the price had and has the obligation to at least reach that level. And now, if we zoom in to see everything much clearer. Notice how the price is working with that breakout origin level. Notice how the structure is being protected and they're not allowing the price to thrive. But wait, this is when the important moment arrives. What do we think from Informic Crypto that the big institutions can do, and how are they going to use the news of approval or rejection of the ETF on Bitcoin spot in the cryptocurrency market? Here, what we're going to do is differentiate that Bitcoin a priori would have already worked out a deceitful bullish climactic action, whereas Ethereum hasn't. Frankly, this event, the fact that it hasn't come accompanied and that Bitcoin and Ethereum haven't moved in sync, has to be totally irrelevant to us. So now we're going to propose two scenarios. In the first one, the ETF on Bitcoin spot is approved. And the second scenario will be that the ETF on Bitcoin spot is rejected. Because if it's approved, what we can expect from the crypto market in the case of Ethereum, we'll see how, but they might offer us an aggressive bullish climactic action with the announcement of the approval. Where here, the retail investor would be euphoric, buying desperately, because they'd see the price going up, and the reason is the approval of an ETF on Bitcoin spot. So, the retail investor would be thinking, hey, this is the future. It can only be something very positive, and would already be associating it for the immediate short term, an event that the major institutions evidently would capitalize on. And one might think, hey, but if they've already done the bullish climactic action in Bitcoin, look, they can do another one perfectly. They can do it. In fact, if we put it into perspective, that supposed bullish climactic action seems extremely timid. So, if the Bitcoin spot ETF is approved, let them do what they want. But it would come with a dramatic bullish movement. Just as with Ethereum, the retail investor would buy, and we believe that the major institutions would absorb and then push both Bitcoin and Ethereum downwards. That's the view we have at Crypto Insight for the news event in the case of approval. And if we look more long-term, you already have the technical analysis we've worked on for the long-term. You know that our vision is that we are now at an extreme in the bullish market, and that sooner or later Ethereum, like Bitcoin, will tend to undergo downward corrections. They are seeking that finite bullish extreme with a hypothetical positive approval of the ETF. Okay, and now notice that it's not necessary to be fortune tellers and want to know if the SEC is going to approve it or reject it, perhaps postponing it until March, or it will be seen. Well, in the event that it's not approved, we could then be in a quite critical situation. That doesn't mean that minutes or hours before the cryptocurrency prices might rise a bit. Right after the negative news, we could see a downturn. Ultimately, if you notice, both scenarios, whether the Bitcoin spot ETF is approved or rejected, have the same directionality from Crypto Insight's perspective. As I mentioned at the beginning, we're not reacting to an event at the technical analysis level. Rather, we've been working on all these ideas for many months in advance, and when the stars align, then we must follow along with the price. Here's a disclaimer for you. Note that the outline drawings don't have to be accurate or anything close to that. They're operational original ideas. And another important disclaimer as well. Remember, here we're speculating about a potential impact, about news that will fiercely and strongly affect the financial markets. What I mean to say is that sincerely, nobody knows if we're at a level to start correcting, or if, on the contrary, whatever the news may be, the asset prices won't stop rising. That, frankly, nobody knows. But from Crypto Insight, we present our vision, our ideas, and from here, for those investors, I'll tell you that if you're looking for market operations, do it wisely, always protected with stop loss, as liquidation of an account, in case an idea doesn't work, shouldn't be part of your dictionary. So, if you enter the market, whether bullish or bearish, everyone will have their own view. Always remember to stay protected. And if you find the advanced technical analysis we've conducted on how the market might react concerning the approval and rejection of the Bitcoin spot ETF interesting, I invite you to let us know in the comments. Now, tell me, what do you think? Will they approve or reject the Bitcoin spot ETF? Leave your opinion in the comments. Also, like the video, subscribe to the channel, and click the bell icon so YouTube can notify you of future posts. And if you want to understand the long-term impact of a hypothetical approval of the Bitcoin spot ETF, I invite you to watch our latest video where we analyze in depth the repercussions it will have on the crypto ecosystem. I'll leave that video on the screen for you right now. So, don't hesitate to click on the video and be well prepared for future market movements. Best of luck with your trades, and until next time.